Ladies and gentlemen of the crypto space, we're live on a Friday, August 1st at 11:31 a.m. I want to open it up with a very simple statement. This time is very different. It is very, very different. But you're staring at something that will never ever change. You, you're never going to be able to help folks. Folks are going to be their self destruction. They're going to be the end of everything they hope and want for themselves. The vast majority will always lose. And that's even if you shout from the top of a hill how to help people. You can't help people. They must be taught how to help themselves. And you can't even teach people how to help themselves. They need to realize it for themselves, how to think different, how to behave different, how to be one with the universe. Because that's what I try and teach you guys, how to be one with the universe, how to be calm and relaxed and hopefully understand why things are doing what they're doing a little bit better. All right. So over the last 24 hours, almost $1 billion, well, $800 million liquidated. What the hell is the matter with people? This is what people do. They YOLO. They're done. They're gambling. They have nothing left, nothing to hope for. There's no rationality left. And that's scary from a social civility standpoint. Rationality is the only thing that keeps things civilized. And frankly, incentive systems. But if there's enough irrationality, incentive systems break down and things get chaotic, hectic, protests, violence, stuff like that. Certainly, well, maybe anarchists, but most people are not looking forward to civility breaking down. But $805 million, that's wild. Appropriate meme, of course. Dollar reversal today was absolutely wild to see. All right, so I was gonna all right, let's do that. Let's do the comparison between what will never change is this gambling addiction that people have. They don't think there's another way. They don't think they can take time and grow their way to an increasingly successful future. So they gamble and hope to make it big in short periods of time and they end up losing everything. Okay, so but look at the Bitcoin chart. This indicates something very simple. It's very different this time. Bitcoin has been up and to the right for the last 3 years. That's never happened before. Now, the problem is everyone looks at daily charts or 4-hour charts or whatever the hell kind of stupid time frame people look at. But this is a 6-month chart. This has never happened before. Six green candles back to back. It's 3 years. And clearly it's just the start because it's August, so it's the second half of the year right now. So we would have had a drawdown historically. That's what we had in 22 and 19 and 18, two consecutive halves of a year in the red. And we haven't had a drawdown in 3 years. It's different this time. It's very different. And then folks are like, why is it different? And then you got to talk about a little bit of macroeconomics, a little bit about Bitcoin theory and how, what they all talk about, the money printer. But we break it down. And it's not really a money printer and who's printing the money. And, they're past the point of no return. And everyone's like, if they're past the point of no return, isn't that death spiral? And then I remind folks that things take a lot longer than the fear mongers expect things to take. It's like, oh, the BRICS currency is right around the corner. And then you'll see that like 55% of international commerce is done in the dollar now. It's the highest it's been in decades. So a lot of the wrong stories are circulated and gain popularity that cloud from actually what's going on. Like this very simple chart, something very different is going on. Something that's never occurred before is going on. Bitcoin is up and to the right for 3 years. This has never occurred before. Why? Oh, maybe it's the damn administration. Maybe it's what's going on in politics. Maybe it's every news headline we've seen for the last half a year since the new administration came in at the beginning of the year. I love that meme. Such a classic. Cute kid. Um, Big intraday reversal. Let's show that chart real quick and then we'll scroll down and look at some of the other stuff I've retweeted and reposted. Um, you're not going to get much on the 6 month, but this is the most important perspective. If you go into the 4 hour, that was a big smush. Who the hell is selling dollars like that? That was a massive dump from 100 all the way down to 98.6. Now, bear in mind, it's a bit of a precarious situation because we found support on the 4 hour 10, which is also above the 4 hour 100. You zoom out, clearly gives you the potential for meaningful bearish engulfings. From a daily candle perspective, that's increasingly constructive as compared to a silly 4 hour candle, which gets lost in noise. Okay, so we've had a rally over the last 1, 2, 3, 4, 5, 6 days, and how that's a meaningful bearish engulfing compared to um, yesterday. And look where we are going to potentially end the week. All right. So you see how a 4 hour candle could be a little precarious, but then you see a smush like this on the weekly, and you're like, holy crap, that is a smush. Talk about them, quote unquote, wanting the technicals to line up and be, you know, expressive of continued downward action. Wow, that's a heck of a wick. Very constructive, I would say, if we close anywhere below the 100 SMA. 98.8, that'd be wild. Obviously, I draw my lines relatively thick, but nine upper, we get to 98.5, that's going to be pretty interesting to say the least. All right. That's when I was trying to express different ways of thinking about the exact same thing. Like a lot of people would see good. Well, a lot of people see good, a lot of people see bad, and a lot of people miss the most important thing. So this was a post along those lines. How do people see this hypothetical person as a loser, a winner, or something else? So I like this post a lot. It's crap. It's going down in price. Said no actual good investor ever. That's a good one. Good investors think differently. They have a narrative. They tell a story, and they state how long for that story to play out. And is it going according to plan? How much time left do you have to wait? Is the narrative invalidated? It's not necessarily about price point. And there's no exuberance in the market, so things are pretty hot late last week, earlier this week. There's no exuberance though. So this is not the way things end. Albeit from a Bitcoin perspective, I remind folks this is clearly a significant premium. Like, for instance, you could see Bitcoin roll over to 70, and I would say like, all right, cool. Isn't that like a test of previous resistance? That would look technically quite reasonable. So people get lost in the noise, and then they rightfully are buying on the way up, and that's like, how do you give guidance to new investors? Dollar cost average. You're going to buy some shit at a premium. Hopefully, you'll buy some stuff at a discount, and along the way, rule number one, you've bought more assets. Like if you see a dip down to here, you're like, all right, fine, that's previous resistance. And then you breach to a new higher high, and so that's a failed breakdown, but it's a retest of previous resistance. There are plenty of ways hypothetically things play out, and that would be a lovely looking chart. That would look great. I don't know what the hell others would do, non Bitcoin assets, or what the stock market would do in such a scenario. That's another story, but that would look great from a Bitcoin perspective. So the reason to think different, to own things, is because everyone's like, "Oh, Bitcoin's going to roll over. Oh, it's beta for the stock market, and all coins are beta for Bitcoin or whatever folks want to tell themselves." I say own more assets because there's narratives that could get weird. It's like the stock market goes horizontal until 2030. It's like 5 years of nothing. Bitcoin does very well. 150, 200, you start to get um, diminishing returns. Maybe things slow down, but things still continue to do very well. There's plenty of reason for crypto fintech to significantly outperform as compared to US equities and as compared to Bitcoin as well. It's a new bubble, which is what government usually wants when they want or need to expand tax receipts, and they don't want to continue distorting the housing market to the point where you get a breakdown in social civility. Because if the younger generations literally, they're already priced out. If they're priced out more, then you get a change in social dynamics, behavior, and whatnot. But are they really going to cause a bubble in equities? You get another 10x in, you know, in Nvidia and Microsoft, and how the hell is going to be another 10x in those things? So okay, so monetize the crypto fintech space. Bitcoin's clearly monetized very well. It needs to monetize 2, 3x on the money, thousand over the next year or two, into 2030 over the next 5 years. I don't know, but I remain steadfast in my interpretation that they need another bubble in a business sector, a sector where there's productivity, financial productivity, and gains and revenues, because that will translate to tax receipts. That's exactly what the government needs. So the government tends to cause or trigger what they need. And they can't do that in real estate and they can't do that in equities. Because then it just gets weird. And then everyone gets left behind, everyone gets priced out, and it just gets distorted. So, all right. It turns out that the younger generations have leaned towards crypto as compared to equities, even though there's a tremendous amount of degeneracy in equities, zero DTEs and whatnot. But if you monetize crypto, you're going to have a higher likelihood of distributing capital to the younger generations as compared to older generations. If you monetize the equities markets more, the boomers get more money. The folks that have their 30-year-old 401ks that date back to the late 80s or mid 90s, and those things are up whatever ungodly number they're up. Or someone's house that they bought for 100 grand that's worth like 1.5 mil. Are they going to double that? So it makes no sense for the government to want to see those particular sectors of the economy to further monetize. So as I've said, I stand steadfast in that I see great reason for crypto fintech to significantly outperform Bitcoin, equities, and real estate. And that's separate and apart from what the world will contribute to the overall dynamics of how things play out. That's just me thinking a U.S. centric perspective. Um, but it's likely the case that other nations will want to monetize a market as well, and they're probably in the same exact situation. Isn't everyone in a very similar situation? How the hell are they going to monetize their equities markets? It's going to piss everyone off. And a lot of countries around the world are in increasingly social situations, compared to like the US, which is still socialist, but less compared to what has occurred, the proliferation of socialist principles, especially throughout Europe, has created a degree of social chaos, in my opinion. And if they further monetize and cause kind of disparity that such monetization causes, the the increasingly social nations um, are more likely in social order as compared because in the U.S. compared to increasingly social nations, you have a greater capacity to elevate your financial wealth because you could do things that you can't in other countries, for instance. Borrow capital, access to credit, whatnot, what have you. And probably uh, an economics professor would be able to describe it better, but there's greater upward mobility. That's the whole point of capitalism, where the land of you can do whatever the hell you want. The American dream, shit. And obviously, the younger generations in the U.S. will scream the American dream is dead, but clearly, the American dream is still quite there as compared to the what countries have done around the world with regard to their socialist programs, where it's sit back and just collect government fees, and which is just redistribution of capital. You got anyway. Hope that makes sense. Anywho, let's see if there's any interesting comments left. Yeah, we didn't get to the move indicator, and then I'll go to commentary on the stream. So a lot of this talk today was about liquidation, how things are the same, yet they're different. The most important macroeconomic indicator, in my opinion, aside from stuff that like Mike Howell would produce about liquidity conditions, is collateral volatility, which is certainly one of the largest inputs into his calculations and data that he charts. The reason that is a topic that I've discussed many times, and I've often given the Aave comparison and a health factor. And if you don't know what Aave is, right, probably should start there. And what a health factor is in collateralization ratios, probably should go there next and understand what that is, and then understand what happens with collateral during times of volatility and how liquidations work and how leverage works. For instance, if you have a health factor of 10, you could probably handle the volatility and take it down to a health factor of 8, 7, 6, 5, and be like, all right, fine. So you have capital, you have access to capital because you're effectively collateralized. Um, so when collateral volatility goes down, you have more comfort in borrowing more. So maybe instead of a health factor of 5, you take it down to a health factor of 3 because volatility has fallen off a cliff for the last 2, 3 months. So that's what this indicator shows from a macroeconomic perspective in the global collateral system, which is US government debt. Structurally at the margins, there's a bunch of other shit that's used as collateral on the planet, but at the center, it's US government debt, period. So this chart tells us what the majority of global economics is doing. We have waited years, and this is the largest spike in global collateral volatility since the global financial crisis in 2008 ish. And it's also longer than 2008. It has taken years, 1.5, 2 years longer for collateral volatility to finally roll over. Look, this is the global financial crisis. I was not financially aware as I am now back then. So I can look back and be like, all right, this makes sense now that I understand how things work. But I have a feeling, global financials didn't wasn't the same opportunities back then. I mean, maybe nobody saw it like the first to really talk about, you know, uh, everything code. It was Raoul, and what he describes, I think, is probably one of the earliest expressions of how everything is tied to liquidity, and liquidity is tied to volatility of collateral, because as volatility comes down, the capacity for the currency supply to expand, the liquidity to expand, increases. To understand that, you look towards the Aave comparison. So we've waited years, ladies and gentlemen, to finally get this move indicator to roll over below 80. I say 80 because we had two half-year halves interact with this 80 line. It's back in 2024. You get a little bit more granularity on the monthly, but you still have that interaction. December of 2024 and May of 2024. They got big collateral volatility spikes. We're finally getting that push lower. You know, you see it more clearly on the DXY, the weekly guppies and whatnot. But you can see the crypto bull markets here as well. You guys know how I circle crypto bull markets from a DXY perspective. So January of 17, February of 18, 17, January of 17. Oh, that's a nice rollover. And there's 18. There's your spike into 18. So here's your crypto bull market. Very simple. So you get your nice breakdown, right? Pretty simple. Dollar rolls over, collateral volatility rolls over. There's your bull market. If you go back to DXY, March of 20, March of 2020. March of 2020, the dollar started rolling over. That's an interesting one. Thought that'd be you'd think that's a dollar supply shock. What was going on? March of 20, June of 21. Well, here's your March of 20, and there's your June of 21. So here's the heart of like DeFi summer. It's literally right there. So there's on the move indicator from the monthly, and there's your DXY on the monthly for the heart of your crypto bull markets. The last two. And the reason this is so important is because everyone's like, has there been a bull market? No, there's been a market. There is always a market. And the market's either doing well, it's appreciating, getting monetized, or depreciating, getting demonetized. There hasn't been a strong quote unquote bull market in crypto since 2021. And that is why everyone is confused. And that is something that could be said. Why it's different this time. It's very different. And we literally show the Bitcoin chart why it's different. And you look at the 6 month and you're like, oh shit, we haven't had a drawdown in 3 frickin' years. That's crazy. Wild. Very different this time. Dare we need to bring up White House and social media posts? Now, what is this framework for trading crypto securities and non-securities side by side? All this project crypto and oh my, I can't even. So I get excited textually, and I try and restrain myself verbally a little bit while I'm talking to you guys and gals. But holy shit, the capacity for seamless cross chain is insane. This is crazy. Intent based cross chain. Oh dear. I mean, you have the same thing with cross curve, and I'm sure it's just going to be everything. It's like you have capital on optimism, and it's access liquidity everywhere, and give you your trade executed back on optimism. Just store your capital on mainnet and it just goes out to everywhere. I've said it before. You're not going to know what chain you're operating on, and you're not going to need to know what chain you're operating on. That is the destination of things. I mean, when Paul Atkins says Project Crypto from the SEC, that all markets are going to be on chain, it's Project Get Boomers to buy our bags because we saw this a decade ago. The boomers are coming. And that's not in a derogatory sense. It's actually a generational class, the baby boomers. And they're going to buy our bags because they don't understand what this is and why it's meaningful. They don't understand the macroeconomic conversations I've described. They don't understand how the financial system works. All they know is Nvidia go up, 401k, corporate match, and all these relatively simplistic capital management concepts that they've encountered over the years. Their financial manager at Fidelity or Charles Schwab, financial manage your own. Okay, so that's the whole point. The younger generations don't have financial managers. The younger generations, hopefully, are managing their own shit and have learned a little bit about how economics work. And that's the whole point of Bitcoin. If you've had Bitcoin over the last 15 years, you're managing your own shit because there's no financial advisor that ever said buy Bitcoin. So if you bought it on your own accord over the last 15 years, because you saw something that other people didn't. So it's project get the older generations to buy the bags of the younger generations. That's a transfer of wealth. We're moving capital from the older generation to the younger generation, and that actually will make disparity better. That will decrease disparity. Literally, you can't make this up. It's got like the administration, it's got politics written all over it. Optics, favorable optics. You monetize the crypto markets. The younger generations are going to be the outsized beneficiary, and you get the older generation to make those purchases. That capital transfer evens things out a little bit. So you don't have disparity. The younger generations can't get ahead. They don't own anything, and you encourage the younger generations to, rule number one, buy more assets that the older people monetize because they're late relative to us who we've owned things for a decade or more. Just obvious. So obvious to me, at least. And on a day like today, where you're on social media and people are squirming, they're all nervous because there's $805 million in liquidations. I do something a little bit smarter. Don't take part in liquidations. Don't get liquidated. Isn't that simple? Just buy something. Is it going to go up? Is it going to go down in price? It's irrelevant. You bought something. Do you own more assets? Yes. Rule number one, check. Own more assets. You buy some shit at a premium, you buy some shit at a discount. Over time, guess what? You own more shit that the old people are going to buy from you and make a higher price, make worth more, stuff like that. And then it brings you to the poll. In 5 years' time, in 10 years' time, this whole equation is ridiculous if you're in your 20s. And I've talked about that a lot. And I'm not going to digress again. But check back in 5, 10 years when you're in your 20s. It's a little bit different than check back in 5, 10 years when you're in your 40s. But guess what? I'm in my 40s and I would check back in 5, 10 years. And I wish I did when I was in my 20s, but that's okay. Kellis, good morning. Frank, good morning. KD, good morning. I thought a concept. Hey, Cap. Happy, can you explain what's up with Nile? Nile's gone, and now it's EtherX. EtherX. Linnea got shilled by New York Stock Exchange, or was it NASDAQ? I mean, this thing is going to be like Shadow on Sonic, clearly similar tech, if not the same tech. So I mean, it's already live. We just don't have a Rex token yet. Rex token launches on August 6th. This is done. So whatever your V, this is a airdrop. Nile's dead, and whatever whoever owned Nile, the Nile gets their exposure to EtherX, the Rex token. Final migration. So that's coming soon, August 6th. Linnea got a big shout out from Consensus and NASDAQ. I don't know where it is. You would think that EtherX would repost it, but whatever. I thought it was more so Linnea. Let's see if it's here for the fun of it. Yeah, look at that. That's because of Joseph and SharpLink, and but Consensus. Oh, didn't Linnea get a shout out? Yeah. I mean, I don't know that those are big names to get thrown around. So I like Linnea. I've said that publicly on social media. I like optimism. Arbitrum is big. Arbitrum orbits. Optimistic superchain narrative is probably bigger than Arbitrum orbits, but look who's taking a piece of Arbitrum orbits. Robinhood. So the point is, all this shit is going to be interesting to someone because everyone's going to stake a claim, grab some territory, and try to own something. So that's why we talk on this channel in terms of exposure. What do you have exposure to? You probably should have exposure to a bunch of things. Not all of them are going to work out, but if you have exposure, well, most of them hopefully will work out. So I like Linnea. I think it's going to be interesting. Why? Because it's being built and pushed by consensus. Consensus is basically Ethereum. That's a big deal. In hindsight, we'll look back and probably say to ourselves, it's pretty obvious. All of it. I mean, not just Linnea. I mean, we were talking about the optimistic superchain network with super swaps, instant, seamless, cross superchain. Oh my God. Oh my God. Coinbase and Base, Kraken and Inc. Oh my God. Come on, in 5, 10 years, we're going to look back and be like, this was so obvious. Sir Joe, President unaccounted for. Sir, yes, sir. The hook. Captain, how much are you benching and squatting these days? Yeah, I don't push too much weight. I like reps. I do 20, 25 reps. I don't have the joints anymore. I just don't. But I don't have the strength anymore. But I still have a lot of the structure that I did when I was younger. But I don't push the weight. Hurt myself. Hurt myself. I like the sauna. That's what I do nowadays. I think that'll tack a couple of years onto my life. Stop. Hello. Arrow, good morning. Great bull market we're in. Yeah, looks shitty, but we're at 150. Bitcoin was at like 109. It was stuck below 112. It was, come on, dude. You know exactly what I'm thinking and what I'm going to say. This market looks pretty good. This market has come a long way. This market is not the same as it was. It is different. It is the same. It is different. It's irrelevant. I own shit. I own stuff. Everyone owns stuff that pers- subscribes to the way I discuss markets. When you own things, you're along for the ride. What's today? It's Friday. We had payday on Wednesday. And some folks with voter escrow exposure get a payday on Thursday. We get paid next week. Sometimes it's less, sometimes it's more. When it's more, there's prosperity. When there's less, there's austerity. And why do we do that? Because that is simpler than these folks running around gambling $800 million. Because that's hard, and most people lose at that. Morning, Cap. Much a pleasure. Cow is multi-chain. Cow swap. Does anyone use anything else? I mean, who who uses Uniswap? That's crazy. That's absolutely crazy. Who the heck uses Uniswap? I don't get it. It just doesn't process for me. Coinbase routing through base starts soon. Oh, oh, yeah. I look forward to seeing what Aerodrome does over the next couple of years. Very much. Good morning, Cap. Thoughts on Curve proposal to nip any future L2 deploys? I don't know. No, I don't have a strong opinion about too much of the governance. I look forward to yield basis. That's it. I think everything they're doing is, I mean, you know what I'm most excited about is Stake DAO and their Boosties deployment cross chain. So I think everything looks great in my opinion. And I think folks miss the curve narrative because they're like, oh, it's just another. Well, the MetaDex is an evolution. Sure, great from a DEX standpoint. But the MetaDexes don't have liability printing. All they have is liquidity financing, and there's little to no derivatives on the MetaDexes compared to what what, what Curve has. And there's no lending. So Curve is not just liability printing, it's also credit. So folks just miss this because they don't really understand the overall economics of what's going on in crypto the way we discuss them. So very interested and very excited what plays out. Cap, did you regularly check? Do you regularly have not checked in a while? I bet you got some good cash up in there. Uh, Bridges. Bet you have over $1,000 stacked up in there. Stake, earn, stake. No, earn, transfer, overview. Okay, so I mean, Stargate's one of my favorites. And where the hell is claim staking fee? Yay, a couple bucks, $1,700. Not gonna complain. Not gonna complain at all. Stake, yeah. Okay, that's nice. Hasn't paid for itself. What's that like 10, 15%? And I've lost a lot of capital with depreciation over the years. I've owned Stargate for quite some time. Whatever. That's cool. That's nice. It's good. It's good. Anything else? This is what I spend my time with. This is what I spent my time with in 2023 and 2024. Work on legal stuff, folks. Instead of getting lost in this insanity in the markets, don't forget to structure your affairs in a strategic way. It's very important. Um, this is pretty damn easy. Nope, not that. Clicking garbage. Get an employee identification number. Apply for an EIN. Let's see if it's online. Authorized use, begin application. There, look. That's pretty cool. What do you want an EIN for? Oh, all right, make a choice. Maybe you do something interesting. Okay, irrevocable, irrevocable. Be smart about it. All right, cool. There you go. Pretty simple, right? Pretty simple. That's how you get tax IDs. So it's literally right there. Just Google EIN and you get tax IDs. So now you got to structure it. You got to write the documentation. So my 2 cents is instead of getting lost in this bullshit and $800 million in losses, liquidations, follow the rules. Rule number one, own more assets. Rule number two, know when to stop buying assets. For the more advanced user, you don't want to necessarily buy at a premium. You want to buy at a discount. But for the less advanced user, just execute rule number one. And if you buy at a premium, all right, Over time, you'll own more assets. So that's fine. And rule number three, of course, is fuck you, pay me. The qualification of the assets I would encourage people to acquire. Things that pay you deterministically. If they pay you now and the code cannot be changed, they will pay you in the future. And in the future, when we go from $300 billion to $3 trillion in these crypto markets, from a dollar supply standpoint, those businesses will pay you more in the future. Pretty simple equation. So you want to manage those affairs. What do you do with the principal? What do you do with the receipts? When you press claim, what is a receipt? How do you manage that? Do you accumulate it? Because look, you can have a Roth IRA or an IRA where you press claim and you don't pay income. There's no tax on accumulations and IRAs and Roth IRAs. What are the other structures that have no tax or reduced tax on accumulations that have tax favorable treatment? What are the structures out there? What are the rules? It is worthwhile to spend time asking AI, what are the rules? Because you cannot play a game well unless you read the rules. In fact, have you ever played a game where you haven't read the rule? Isn't that an interesting statement? You sit down and play Monopoly, and let's say you've never played it before, you're probably going to read the rules on how to play the game. And that's just Monopoly, yet alone some of these complicated games nowadays, these board games. You read the rules. So if you're playing in these markets right here, read the rules. And then he writes some documents. Anyway, so that's what I've done. And you guys know that. So I post all the stuff that I've done on our Discord. And it's years of work, painstaking work that I've shared with you guys. I hope it's helped. What was I working on? Markup. So here, I'll show you guys some of this stuff. Application out of date. That's a boring one. A session of wealth. This is a good. I wrote this recently. I shared with you this with you guys recently. It's a nice document. Simple document, about 7 pages, 8 pages with references. So 7 pages. So I wanted to get a little philosophical. What is wealth? All right, great. What's the history? It is, all right, John Locke. This is very important. These are the philosophical principles or the core ideas that how governments were formed. These are big, big ideas and status quo precedents, the Supreme Court, and rules from the Internal Revenue Code. Definitely. Look, state law. State law is a big deal. So this is the stuff that I would encourage people to work on. And if you need a starting point, you jump on Discord. And this is the stuff we talk about sometimes. I wish we talked about it more. I wish I had folks that gave a little banter about it, and they're working on their own. I've only had a couple folks over the last years that interacted with this topic. Anyhow, steak, nice. You're talking about Stargate, yeah. Anyhow, anyhow, where would one start for exposure? For getting exposure to Linnea? Uh, LP on EtherX. I don't even have it up here. You could build an LP on EtherX. Stablecoins and whatnot and call it a day. Now, the reality, the harsh reality is money makes money. So here's the liquidity. Oh, shit. Damn. All right. So these are big numbers. Now, this is obviously garbage. You get wrapped up in a meme coin. You could make capital if you're you're quick and or lose capital because that could depreciate. Foxy's been around for quite some time, but it's still a meme coin, no less. And the big numbers throw folks off. But that's cool. That's off stable coins. Um, I'm surprised to see that, but all right. Uh, that would build potentially a decent position over the course of a year, and that's clearly not going to last. Anyway, why am I describing this to you, Joel? You've been around the block. You just want to know how do you get exposure to Linnea. All right. LP on EtherX seems most reasonable in my opinion. What the hell am I explaining this shit to you, Joel? You know this stuff. LPing. Could you imagine trying to explain LPing to folks like coming from a brokerage account at a financial firm like a Fidelity? Or could you imagine trying to explain this to folks? Oh dear. This is impossible. I often think about trying to explain this to my father, who's may he rest in peace at this point, but I don't know. He would have gone cross-eyed. Or my grandmother, may she rest in peace as well. Those would have been fun stories to try and tell. They would have loved these stories, I think. How many stories have we done over the years? Close to 1,000, I think, at this point. All right. It's a Friday. Stay cool, calm, and collected. Follow the rules. Don't be irrational. Keep it simple. The odds are simple produces the best results. It's literally what I say at the office. If it's complicated, stop and make it simple. And I do that with software, but I do that with everything in my life. Why do things have to be complicated? Why does capital management need to be complicated? Now, obviously, it gets complicated with law, but you still can keep it simple with the law. Like some of the biggest takeaways that I have, uh, 2 second thought. Um, a lot of people make it more complicated than it needs to be. Meaning, when you read the rules, like IRC 61, you read the rules, and folks are like, "Oh, but what does that mean?" Okay, so you could ask what it means, and then folks are like, what if?" So the point is, these words have meaning, and every subtle inspection counts. So the fact that you could read this means the same thing as a lawyer reading it means the same thing as a court reading it, which gives you power. And that's a big deal. It's a level playing field. It really is. So obviously, here's a cute little example. Gross income means all income source derived. Every back when AI first came out, it got hung up on IRC 61 so much, and I'm like, all right, cool, that makes sense. Means all income from whatever source derived. Um, what about literally the preamble? Except as otherwise provided. So what does that mean? Is that does another part of the subtitle state IRC 61 applies except? It's not really an except. So there's other language and other choices of words that express or imply directly or indirectly, explicitly or implicitly, except as otherwise provided. It as provided that there are exceptions or in different scenarios or not just explicit. And this language is used quite often, except as otherwise provided. And then you quickly, or maybe it takes time to realize that there's a lot of interpretation. Look, you got 61 and then you go to 641 and 641B. computed in the same manner in the case of an individual. Oh shit, except as otherwise provided. So 61, 641B, and then where's it otherwise provided? What does otherwise provided mean? What does it mean? All right, so get cracking on AI, and you can't just ask what is otherwise provided. It's now you're getting into what's called semantics, definition of words, language, and then you get to these types of documents where you got these types of philosophical conversations. You could literally have you could write entire documents about the choice of one word versus another. That's an interesting reality of some of the stuff that Congress has written. Now, obviously, IRC is written by Congress. Code of Federal Regulations, which is that when they say there's like a million pages of tax law, they always refer to the Code of Federal Regulations, and that's Treasury's interpretation of the IRC. But these are the words of Congress. So this is more meaningful in many regards. It's the actual law. Anywho, I digress. I like this topic though. I find it very interesting. The advisor in the house. How are you, my friend? I haven't gotten back to your message on X. I got to do software when I get off this call also. So I'll get to you, dude. I promise. Um, Joel, was it you on Llama Party earlier? Yes. Hello. You see the proposal to not support curve on L2's thoughts? I don't know what to think of that. Um, I mean, it should be basically an automatic deploy at this point. I think it is. They have scripts that say you can deploy anywhere, on obviously in EVM. So what's the support? I mean, the whole point of this software is you don't need support. You need deployment. Once you get to a point where it's the code cannot change, where it's optimized and perfected as best as possible, deploy it. Deploy, deploy, deploy. So what does the word support mean in the context of immutable code once deployed? Interesting. What about cross-chain swaps on cow? Yeah, very excited about that. I mean, come on, dude. We come from like 2020 and 2021 where you would use multi-chain XYZ, the original one that Andre built to get capital from mainnet the Phantom, and it didn't work most of the time. And then we had the new multi-chain that didn't turn out well. And then layer zero came online and changed everything. Stargate changed everything. And CCIP's there is not used, barely used compared to layer zero on chain. Um, so very interesting. Seamless cross chain. Really kicking into gear, isn't it? Seamless cross chain. Anywho, general curse future on L2s. I don't know. I think the meta dex on L2s. I think Curve is great for. See, Curve. I don't. So the primary product of Curve is not their exchange. The meta dexes are great from an exchange standpoint, um, and I think I like the pure bifurcation of incentives where LPs get pure governance tokens and voters get pure cash flow, uh, fee revenue. So I think that's better. This is me. That there's no better or worse. Like, oh, that's better. Curve's not good. So my 2 cents is what's more important is their dollar product. It's a much bigger business. So dollar liabilities are just an enormously big business compared to foreign exchange. There's $300 trillion out there, and a blended interest rate is like 3%. I mean, the dollar's a $9 trillion a year business. That dwarfs everything. That's revenue. It's a whole nother level compared to everything. I mean, what's the next largest business? I mean, Walmart and Nvidia, they're microscopic compared to the dollar. Okay. So, point being, CRVUSD is much more important. And what Curve has is a complete vertically integrated stack of technology to support their dollar product. They have a base layer of voter escrow, which is not the pure bifurcation of the MetaDex, but it works and it has worked and it still works. And vote market's hot and Vodium is hot. So it's not insignificant just because uh, the MetaDexes have shown to be excellent in reception and what they achieve. I think they're quite meaningful. Um, so I'm less interested in Curve as an exchange. Um, that revenue, that LP, that exchange revenue, compared to the revenue from liability printing and from credit. And you support those liabilities using um, the liability financing system, the voter escrow system. Okay, that's my 2 cents. How much did a swap? I remember gas fees during like 2020 and 2021. They were literally on mainnet hundreds of dollars, hundreds and hundreds of dollars to do a transaction. That was crazy. I think the most I ever spent on a transaction was like $1,000 on this because something was crashing or something was going parabolic, but you maybe I don't even think it was mainnet. I don't. No, that's impossible. Mainnet was definitely the most expensive. I just remember weird shit. Anyway, it's best that I don't remember the shit that we did back in 2020 and 21. Um, oh, that's a beautiful chart. Why is there Metadex? Because it's a reasonable question. I do not know. I look forward to seeing what happens if one does come to mainnet. Well, there is one in mainnet. I mean, Solidly's on mainnet. Solidly V2, not the original, but it's on mainnet. It's just not that popular. Um, Do you see growth coming to non-USD? No, I don't. I see there will be use of non-USD stablecoins, but I don't see a reason why anything other than a dollar is going to be wanted significantly. For the same reason, I don't even know where it is at this point. Dollar use historic high. I don't know. Let's see if we could find that chart. Oh yeah, that's convenient. When was this? Is this an old one? It's higher than this now. So this is old from 24, but it's higher than this. So the use of the dollar has gone vertical, period. So it's the dollar that's in demand. Oh, this is only Swift. De-dollarization. This is de-dollarization. Look at that. Look at that dollar, the light blue. Oh, but the BRICS currency. It doesn't work like that. It's because 99% of dollars in existence, 99% of dollars in existence have an interest rate associated with their continued existence. The world opted into this. Opted into this. They chose it. So that's what it is. The dollar is what's in demand. United States dollar. There's not enough of it to satisfy demand. And the only I why it goes down is a fascinating question. How you get a dollar smush like that's a remarkable dollar smush over the last year. Wonder if we punch that 100. We really should. I want to see us punch that 100. Very much so. I want to see this weekly 100 stick. That's gotta stick. 6 hours left in the weekly close. It's got to stick. It's got to stick because it's got politics written all over it. Just has to. Anywho, Joel, a pleasure. Always a pleasure. Friday, August 1st, 12:31 p.m. Thank you all for joining me today. 185 people made it to the end of the stream and are now that much more rational because of it. I wish you all a good weekend. Find your inner peace. Avoid the insanity. Sit in the sauna. Do what you must. Let time pass. Execute rule number one. Own more assets. And I will see you guys and gals on the flip side next week. Until then,